Good morning, traders. This is Joanne with In Forex. Welcome to our Forex market news broadcast for Wednesday, April the 16th, 2008. The headlines out of Switzerland this morning read, dollar helped by better PPI news and S&P 500 up. The U.S. dollar gained against the euro on better than expected PPI figures yesterday. The PPI rose by 1.1% versus an expected 0.6% and a 0.3% previous. The Empire Manufacturing Index came out better at 0.63 versus a minus 22.33 previous, and much better than the minus 17 that was expected. These data figures are firmer than expected and point to a lower chance of an immediate U.S. recession. Time will only tell whether the U.S. can maintain firm data releases and prove itself to stay out of a recession. Traders continue to look for a catalyst to push the dollar up. This may come in the form of the Fed's announcing greater inflation concerns in their commentary. Several investment banks are targeting the euro at 147 over the medium term, 3 to 6 months. The German ZU sentiment index for April came out at minus 40.7, worse than the expected minus 30, and also the previous minus 32. The current situation index came in strong at 33.2 versus 32.8 expected and 32.1 previous. The ECB will be looking forward to inflation data coming out this week. In short to medium term, traders expect a healthy retrace in the euro against the majors. The euro-dollar pair has fundamentally and technically overextended itself to 159.42, levels that will not be sustained should any slowdown in the Eurozone economic announcement come to fruition. Okay, I don't know about anyone else, but I'm getting a little bit dizzy. Yesterday, analysts were telling us that they expected the euro to reach around 160. Today, they're telling us mid to short term that they expect the euro to retrace to 147. The other information that they keep giving us that is going up and down is whether or not the U.S. is in a recession. Is it just that they are afraid to use the R word? Because if they say we're in a recession, does that then mean that we can go into a depression? With all this conflicting information that we are getting through the fundamentals, it is definitely a good time to be trading your technicals and watching them very closely. The dollar lost ground in the Asian session after the greenback rallied on the back of strong Empire Manufacturing surveys. Speculation had been growing all morning that the U.S. CPI would print higher than market expectations, but it came in unchanged. It was the German inflation figures which stole the show and stayed elevated, giving the euro a swift bounce. The euro-dollar surged from 158 to 158.45. It is now trading at 159.59. And the pound-dollar jumped from 196.20 to 198.88. It is currently retraced and is trading at 197.55. Additional European inflation figures should keep the dollar pinned until mid-session and as the market adjusts to incoming U.S. data. Despite the RBA minutes, which showed that the central bank is clearly in a neutral bias, the Aussie was able to gain ground on both the dollar and the yen. While the Aussie is poised to experience weakness in the midterm because of current commodity prices such as crude oil at $114 a barrel, this increases risk appetite and higher yields and will keep the Aussie supported. However, its gains will be slightly less against the Kiwi, which perhaps has stronger underlying fundamentals. You might want to take note that the Westpac index was slightly higher than the revised figures, indicating that growth is moderating at a slower rate than markets have expected. Markets will be very critical today of the European CPI figures, given the collapse of the German zoo yesterday. The euro strength rests squarely on interest rate differentials. Furthermore, Germany's concerns over financial markets and lasting strength of the euro has eroded confidence, indicating eventually that there could be a spillover into the real economy and a response from the ECB. Analysts are currently saying that the first ECB rate cut could be scheduled for September, and the minor dip in economic growth figures will not drastically change Trichet's mind. That is, unless inflation rechanges course. Yesterday's PPI figures will keep the Feds diligent and rate expectations in flux. And that concludes our news for today. We hope you're finding this beneficial to your trading. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you'll find information on our Traders Training Center, where our motto is Traders Helping Traders Succeed in Forex. And also you'll find a link to our Yahoo forum, which is also called Succeed in Forex. Thank you for viewing, and we hope you'll be able to join us again. So happy pipping to you until we meet again.